Okay, good afternoon, everyone. Post-lunch shift, so you guys have a lot of sugar in your bodies and wanting to sleep at the moment. But yeah, it was very exciting listening to Dr. Gwala's presentation. And I have to add a little anecdote. My daughter is 11 years old, considers all the music that I watch vintage until she watched Stranger Things, and then she walks around the house singing Material Girl and those kinds of songs, right? Yeah. So I'm from the Banking Association. I head up the payments division. What we do is look at the various needs for banks to modernize, to remain sustainable, and broader than that, looking at the ecosystem, South Africa itself, and where it fits into sort of the global pantheon of things. There's a couple of dangerous sides to this, and there's a couple of things that we do need to learn. And I'm hoping that in sharing this, actually, my key hope in doing these kinds of talks is to enthuse a sense of purpose amongst this generation. It's not just about tech. It's not just about systems. There is something much bigger happening. South Africa needs to take its place. It needs to transform. It needs to become something that aligns with Africa and digitalization. And that path is really important. Because if we don't do it properly, we're going to struggle. And I actually think this generation when I say this generation, I'm talking about the people 10 years younger than me, right? Because I'm on the exit path from this. I won't be around that long. So that's what I'm hoping to get across today, is to give you some insights into what we see happening around the world, to talk about where my observations, and they're totally biased. I don't claim there's any fact in this. I honestly believe the idea of prediction or pure mathematics or science applied to strategy is a misnomer, right? But I do think we can adapt and inflect and learn as we move along. Okay, so I take a lot of pleasure in having created that word cloud on the side. The idea behind it is there's all these words and there's all these things and everyone has jobs, and you go in from 8 o'clock in the morning and you finish off sometimes at 5 o'clock, sometimes at 11 o'clock at night, worrying about one of those things, right? We worry about all of these things: cash and digital identity and prosperity and inclusion and financial inclusion, all of these things, right? But what's it all about? What are we actually trying to do? What purpose are we trying to serve in doing this? So I'll talk about evolution and how it challenges strategy, the need for collaboration, decentralization, national purpose, and value creation. I'll talk about a perspective on banking and how this is evolving. I'll talk about payments and payment systems, which out of all of this I actually know a little bit about. I'll talk about assumptions we must challenge, because often we get these reports coming from the ether that talk about big things and say these are the trends and there's this certainty on this and this certainty on this. And some of these assumptions are empirically false. They don't work. And all it takes is a little bit of logic to look at it and say, but that doesn't seem to be true. I'm going to talk about Africa because, importantly, South Africa is locked and tied into Africa, and it has to leverage that relationship. Let's not go in the same direction as Brexit, all right? Then I'll give a few recommendations. So my objective, and I have this thing about saying I have hidden agendas that I share with everyone, it's to influence you a little bit. Yeah, I think we're at a crossroads, and that a successful future for South Africa relies on collaboration, shared objectives, and the buildings of foundations that take all people forward. Okay. Before I get to this, just in terms of the longevity, my stay or my tenure in payments and banking, it's about 25 years. I was part of the team that created the real-time clearing product in South Africa. We were one of the first countries in the world to do it, arguably the first country because it was a proper interbank real-time clearing product. Yet, it wasn't about the technology. The adoption didn't happen. It didn't land in the market. And today, my friend Shergren is here. We're going to do RPP, PayShop, and we're going to launch and do this product. And it's my sincere hope that we give this all the legs to be successful. And that's not just technology. That's about bringing the market together. It's about selling the product. It's about opening the corridors, recognizing that the market itself needs to be leveraged, that it's not simply about products, but it's about understanding. So, big picture, really big picture. I mean, that's like cosmological scale stuff, right? Evolution is taxing our abilities to develop strategies and plans. I mean, if you think of it as a long arrow, we sort of come up with this idea and we say this is what's going to happen, and this is true for policymakers and regulators as well as CEOs and the like, right? And everyone comes up with these long vectors. The problem is something happens in the middle and it cuts the arrow in half. And all of a sudden the strategy or the vision or the policy is challenged. And we see this all the time, right? So it's not really about strategy anymore. It's more about evolution. And evolution by natural selection has certain qualities. It inflects. It chooses the path of fitness. It learns from itself. It doesn't lock itself into infrastructure. It doesn't lock itself into a perception of the future. And that's very important. So there's a lot happening in the world. Globalization is happening, right? And that's massive. It changes everything, right? We are locked into trade deals with the rest of the world. Our inflows and outflows are dependent on these trade deals. We have to be nice to some people. We have to be not so nice to some people. And a lot of this is about the charade or the stability around our trade relationships and how those work. Geopolitical forces are changing a lot. And the stuff happening in the north, right? COVID, right? These things change everything. March 17th, I think it was 2019 when COVID started. Right? The day before that, all of us had plans and strategies and all of these things, right? And then COVID happened and we all went home. Right? And all those plans and strategies were just gone. Right? One of our top CEOs, when asked the question, you know, what's our budgeting looking like? He said, what budget? We're doing this from week to week. Right? You can't budget in a cycle like this. We're learning, we are adapting. Last year, we were involved in the 𝐂𝐨𝐻 unrest, and that wasn't about strategy, it was about operational adaptability. Get on the ground, expose the right people, get the brains working, and get the cash out in 14 days to the social grant recipients in KwaZulu-Natal. So what you're seeing is that the depth, breadth, accuracy, and precision of information, which in turn informs choices, is increasing. So we're seeing greater granularity, right? Bigger numbers and much smaller numbers, you know, nanometers and big Googles and things like that. Macro data is no longer good enough to compete at an individual business and government level. Right? Jeff Bezos talks about tracking the customer. This is a very, very important insight. You see, we're no longer at the space right at the top where you can design a product and say the customers are all going to simply accept it. What you have to understand is that supply has to correspond now to demand. And demand-based innovation, which is where the fintechs come in, which is where the smaller companies come in, that is really important for markets. The rate of change has been increasing. You guys know this. It's a really interesting mathematical problem because if the rate of change increases, you can't simply apply linear improvements to your business to do things, right? You've actually got to distribute. You've got to divide the problem up. You've got to change the algorithms themselves. Very importantly, big picture, is we're seeing two worlds emerging, a digital world and a physical world. And this is interesting because what happens in many policy environments, what happens in many companies, is to attempt to extrapolate the physical world into the digital world. But they are entirely different things. Boundaries, measurements, speeds, all of these things in the digital world are very different. Digital identity in the digital world is a fundamentally different thing to identity in the physical world. And so one of the things I do believe is that countries that are going to move forward will understand the separation between digital society and physical society and that their citizens live in both. It's not simply about the geographic rules. So putting it another way, The digital needs to complement the physical. So what we have is this big inverted pyramid in the middle. And you'll see there's two scales, the LSM groups and the availability of products. Now, this is not science, it's just observation, right? I haven't done any quantitative study or anything. But what I can tell you is everything is cash. If the lights go off today, within 6 hours, it's not just the poor that need the cash. Everyone in this room is going to be dependent on cash. Within 6 hours. The mobile phones we love, the technologies we love, will become useless within 6 hours. Now, what we find, and this is one of the challenges in South Africa, is we have a lot of digital product available at the upper LSMs. People like myself are overserved with product. I can do more than most people in the world with the products that I have available. But as we go down, for some reason the slide is truncated, there's actually a piece below this as well, which is empty. As we go down, we find there's less and less product available until we end up with only cash. That's problematic. It's hugely problematic. People like me are being overserved and we're being given more and more product, yet a large percentage of the population, about half the population, is underserved. And you'll see a very interesting correlation. I don't know if it's a true correlation, but or if it's a perceived correlation, but you see a very interesting thing. The rate of expansion of digitalization is coinciding with the rate of increase of inequality. So I have superpowers because of my digital access. I'm not smarter, I'm not fitter, I'm not better. But I can go onto LinkedIn and I can leverage my network. I can use technology to do things that the lower LSM simply can't do. That's a dangerous space to be. So what can we do? We can recognize the scope and the change of the changes and the impact on people and societies. We can take lessons from those that are showing progress in taking their societies forward in both worlds. And there are specific countries that are doing this, right? We've seen it happen. We've seen it. Singapore has been on a path to own the future since the 1960s. They've institutionalized the ability to own the future. And that is a really powerful thing because that is the long-term journey. We are seeing what is happening in India. The UPI is not just a payment system. It is a platform that is going to open up digital society in India. It will unlock the economic potential of 1.4 billion people. That's incredible stuff. And more importantly, we're seeing it happening in Africa, right? We're seeing this stuff happen. It's not about technology. There are people in Africa using USSD to do innovations that are mind-boggling, right? So it's not about the Starship Enterprise. It's about being able to correspond with the market and unlock the potential of the market. We will need ecosystem collaboration, value creation, and decentralization. And decentralization is simple, right? You know, the previous speaker spoke about AI. We hear this term that the economists use, which says moving from the firm to the market. So I've got a particular passion for markets. Markets are incredible organic evolutionary mechanisms. They don't wait for rules and regulations and politicians and business people to make products. The taxi industry in South Africa is a very good example of this. Where there is demand, the market will figure it out and they will create a solution. And the idea of decentralization says instead of trying to make 5 million decisions in a big grey building in the CBD, maybe a better way of doing it is to separate that problem by distributing it to 1 million different centers of control. Above all, what we must do must put people, all people, at the center so that we optimize our future capability. And this is not me speaking as a bleeding heart. It makes economic sense. The future is going to be about people. It's going to be about numbers. This entire world that we're in is about numbers, big numbers. Right? South Africa has 60.8 million people. Africa has 1 billion people. If we do not leverage the entire 60.8 million people, and we do not connect with the 1 billion people, it doesn't make economic sense. So, can we build something like this? Right? Value creation. Right? The idea of creating, so value extraction is the idea, and this happened in Africa when the mobile networks, the big mobile networks all looked at Africa. They could not find personal disposable income and value that could be extracted from Africa and said, well, we're going to back out of this. We're not going to do it because there's no value in Africa. Right? Mo Ibrahim saw this differently. He came into Africa and he said, that's not how economics works. Economics is about value creation. If you create value in the market itself will create value. It will create innovations, it will create new businesses, new industries, and that in turn will create economic value. And he was right. He sold his shares in the business for $3.4 billion. But here's a better example. So, here's a thought experiment. Imagine if you had to pay for each click on the internet. Even if it was a millionth of a cent, the mix-it model, right? Does anyone think the internet would have grown to what it is today? And yet, I think it's inarguable. The internet is probably the single biggest source of innovation the world has seen. Right? Smartphones, all of these things come on the back of this massive network. Right? And it's not a tidy network. Okay? It's not, you can't map this network. This is an untidy, fragmented, yucky system built on TCP/IP, which is a horrible protocol. Right? Back in the day, we would look at this and go, this stuff is ugly. Let's use IPX or something like actually has rigor to it. Yet this untidy, messy system, which none of us contributes any money to, by the way. Right? None of us pays a cent towards the internet itself. We might pay for data, but not the internet. Right? And yet we get all this value out of zero. So when Berners-Lee, and that's a young picture of him, he looks a lot older now when he's doing the Web3 piece. When they started this thing, they had this idea that the internet would be something very, very different. And this is where Web3 and Berners-Lee is going back to. The idea that the internet has become too commercialized, that people are losing their identity on the internet, and it needs to move closer back to its roots. I don't know if they'll be successful. I think it's very difficult to recall a battleship once it's started off. But this is a thesis from my side. What if the payment system was like the internet? What if it was just open, right? In the same way that web pages were created, in the same way that millions and millions and millions of people go and experiment and try things, what if that was the payment system? Instead of something which is, at this point in time, very commercial, very siloed, it leads to problems like remittances between countries. It leads to problems like communications between countries. I mean, could it be possible that that could happen? So I'm running out of time. So banking. I'll go very fast through this. So I never know the answers to these questions, right? It's always good to have both sides in your head, right? Is banking an archaic solution or a highly adaptive system? I don't know the answer, to be honest, right? It could be both. What I can tell you is 3 industrial revolutions, banking fundamentally transformed before and after each industrial revolution. The system of banking itself is highly adaptive. My model, it works on 3 legs. It works on the trust protocol, or the idea that people trust banks even though they don't like banks. Right? And this is actually well-researched stuff. If you ask people, let's say they don't like the bank, but if you ask them, where do you want to leave your money? It's the bank. Any one of you will walk into a strange country with strange language, and you'll see the word bank above the door, and you walk in and you'll give your money to a stranger in a building you've never seen before in your life, just because those 4 letters are above the door. It's an incredible thing. But that's changing. The trust protocol is changing. It's about complexity. So what banks do is they move from surplus units to deficit units. They do money creation, and they move money from one side to the other side. But they do it billions and billions of times. And each of those decisions is made in a very precise and calculated way. So money movements, the fluidity, the liquidity of the system is actually maintained by the banking system. That's its fundamental function, money creation and the movement of money, the flow of money in the system. And then, of course, you have regulations. Many would argue that regulations are an inhibitor to banking, but it's also something that is very necessary. You can't take public money without having these kinds of regulations in place. In terms of payments, we've gone through 3 eras. We've gone through the transport era, where I started off, where payments was all about sending money from one place to another, and it had to be done either in scale or very, very fast, and really no one wanted to speak to us about strategy and things like that. We were a back office function. That happened with the BIS. 9/11 happened, and then money laundering and the like started coming around. 9/11 drew a sight on the payment system and said, well, this payments information is very interesting because we can find terrorists. Right? And that led to some very interesting things that happened subsequent to that. The big techs, the guerrilla techs looked at this and said, whoa, big data on its own is kind of useless. What we need is transactional data, human behavioral data, to actually make sense of things. Right? Knowing where someone stays and all of that is interesting, but it's got one use case. Knowing what people did every second of the day, that's what payments does. Not every second, but yeah. Then, of course, we had the global financial crisis, which highlighted the resilience of the system, because before then, people like myself would tell the regulators and policymakers, don't touch it, you're not smart enough, you'll break it, and we cycle the GDP of the country every 3 days. But then the global financial crisis happened, and the payment system was resilient, and the regulators went, whoa, you guys, maybe we can do more. And that injection needle indicates that what you can do with the payment system is actually bring about reform in countries. You can actually inject changes to the financial system through the payment system itself. I'm on my time. I'll take another 2 minutes if that's okay. Okay, so the dangerous assumptions that hold us back. And I find these are, you know, and I hear these all the time. I hear people saying these things like they're true. Technological adoption is the barrier to inclusion. What rubbish. What absolute rubbish. There's no WhatsApp manual. There's no Facebook manual. People adopt technology intuitively. It happens in households. The 10-year-old in the house will show the grandmother how to use it. And that mustn't be the excuse for holding back on financial inclusion. People adopt technology. We believe that value extraction is sustainable. It's not. It doesn't work. We believe the informal markets will wait for the formal sectors and the regulators. No, that can't happen. Right? People have lives. They want to put their children through school, they want to pay for their medical bills, and they can't wait for the formal sector to figure itself out and hand down a solution to people. We believe the informal market is irrational. That's an insult to my mother. She was someone who worked, had left halfway through high school, yet had one of the most astute business minds I've ever encountered. And you will find this everywhere in the informal markets because it's real problems. Right? When you get into an informal market, you find the people in those spaces are the marketing manager, the sales director, the accountant, everything all wrapped in one. You will find a person who can sell you a carpet and negotiate that carpet for you and know that the 500 carpets in that store, what the cost prices are, what their take-home is going to be, what their profit margins are, all here. Without big complex systems. That's real business. We think low-income borrowers are bad credit risks. Again, nonsensical. Low-income borrowers need the money, they need the loan. They are not going to default on the loan. It's people like myself who can afford lawyers, who at the end of the cycle, after we've borrowed lots and lots and lots and lots, we hire a really expensive lawyer and we get out of the system. And we also believe that any single company or entity can solve for 100% of countries' people. That's not possible. No company can do that. So, I'm almost at the end. Societies, countries, regions, and firms that collaborate on and defend a collective, clear, and resolute national vision that embraces value creation and prosperity will have significant socio-economic advantages in the future. This is no longer theory. We are seeing this. There are winners emerging. It's about harnessing the full potential of a country, ideally a region, ideally as big a number as you can get. Those that remain fragmented, locked into siloed initiatives, who pursue value creation, value extraction, and resistance to change, will face ongoing social and economic challenges. And we'll always be fighting against regulations, policies, changing the systems. So, 2 slides. The national vision is we see a clear trend. Companies with a clear national unfragmented state and private sector leadership are able to pursue infrastructure needs. I see this happening in India, right? And that's the recent example. If you look at the Nordic countries, they've been doing this for about 100 years. Clear infrastructure alignment, policy alignment with their particular demand statement. So this virtuous circle exists, and I recommend the book. I've even put a QR code on it. Please read it. An awesome book, right? Value creation, prosperity, and inclusion are important. So then we get to Africa. I attend a lot of conferences, speak at a lot of conferences, and I can tell you there's a very different feeling that I get from Africa at this point in time. And I've been involved in this space for 25 years. Africa's not looking for a handout anymore. Africa is predisposed. It is actually suited to digitalization. It doesn't have the infrastructure that many of the other countries have. It will take the Americans another 10 years to get rid of checks. But yet, most countries in Africa will never even bother to look at that. African countries can write digital-first rules. This is powerful stuff, right? Decentralized rules. But above and beyond this, the kind of passion that I'm seeing coming out of young entrepreneurs, young fintech heads in Africa is incredible. Watch Ethiopia, people. You're going to see big things coming out of Ethiopia, right? So, here's my recommendations. We've got to enable the future. It's a ridiculous exercise to try and solve anything in the present. You've actually got to create foundations that enable the future because these things are intergenerational. We've got to clearly commit to and prioritize nation building and region building. And I know this sounds big, but that's the point. This is about South Africa. It has to be big. We've got to learn from others, but appreciate that no one is an expert or knows the future. You've got to recognize very importantly that technology is an enabler, not a plan. We built RTC in 2006. That's a technology. And for the time, it was ahead of anything in the world. And yet, we've got to set the rules and reward value creation as clear objectives. And that means disincentivizing value extraction. We disincentivize value extraction and remove the pirates from the system. Because they are pirates. And that's not a bad thing. Capitalism is a wonderful, wonderful thing. But when it gets to pure capitalism and toxic capitalism or in-state capitalism, that's when things are problematic. We're not collaborating and there's no bigger purpose. And most importantly, we have to start moving. We have to have scary conversations. We have to fail. And we're going to do it quite often. But we have to learn to fail faster. Not just fail. Fail often, learn to love failing, learn to pick ourselves up and go, let's do something differently. And we've got to adapt. Thank you very much.